Money is one of its primary functions is to reduce uncertainty and to give you optionality into the future. And Bitcoin is a better savings vehicle. It should be a part of that mix.
There's a delayed gratification and they just choose to make really big purchases early on and put themselves back in debt. But I think just from human psychology standpoint, we're always chasing the future instead of trying to live in the present.
If you spend the first 4 or 5 years stacking as hard as you can, building a nest egg of Bitcoin as fast as you possibly can, stacking sats as fast as you possibly can, you actually could start to let off the gas in the later years. It's actually very easy. Just think about what you're spending, make sure that you're saving as much as possible early on, and then you just buy Bitcoin.
Welcome back to the Bitcoin Fellowship. Excited to bring you this week's episode with Trey Sellers. We had a great conversation about Bitcoin as a store of value and a builder of long-term wealth, and ultimately how you can make medicine your side gig. We're here because the cost of ignoring Bitcoin is too high, and our mission is quite simple. We want to open genuine conversations with physicians and other professionals about how Bitcoin fits into lives built in service of others. This isn't just about investing, it's about freedom, resilience, and waking up to the real opportunity cost of staying asleep. Without further ado, let's dive in. Welcome back to the Bitcoin Fellowship. Today we're joined by Trey Sellers. He's the Vice President of Sales at Unchained, a leader in Bitcoin financial services. Unchained offers secure multi-sig custody, Bitcoin-backed loans, and Bitcoin IRAs. Their overall goal is to empower their clients to control their Bitcoin, and they do a great job of that. We're excited to explore his role at Unchained and his vision for Bitcoin. Trey, welcome to the Fellowship.
Thanks for having me, guys. Really excited to be here.
So tell us more about yourself. How did you get started with Unchained? What exactly is your role there? And we'll jump into some of the topics we sent you.
I have been at Unchained for about 4 years, a little over 4 years now. And I came from traditional finance and banking as my background. I was in various roles across various companies, a lot that you would have heard of, Goldman Sachs, Deloitte Consulting, SunTrust, which became Truist as part of a merger with BB&T, and MetLife as well. All various types of financial services type roles. Prior to joining Unchained, I was at Truist in a capital markets focused role in that business, doing risk and P&L and analytics there, sitting in the middle of trade flows, helping the traders get the data and information that they needed, and working with the heads of the desks and the accounting folks and the technology people and the operations people, really kind of right in the middle of all the flows of the daily trading activity that was going on. I kind of became the Bitcoin guy at the bank after really seeing what was destined in my mind, or most likely to be the case in 2020 after the halving, that Bitcoin was going to go on a run. And I've been in Bitcoin since about 2014 is the first time that I bought it, and didn't know what I was buying, so I didn't buy enough. But by that time, I was fully down the rabbit hole, and I took it upon myself to really educate the people around me because I knew that they would have questions, right? Like, what is going on here? And they, in my mind, I was doing people a favor to say, look, you should know about Bitcoin because your clients are going to ask you about it, and you don't want to look like an idiot not having an intelligent response to those questions. And so I put together a presentation I called Bitcoin for Bankers, which was really approaching that question of what Bitcoin is from their perspective and why should they care, and what do the markets look like, how liquid is it, how does it trade, what are the different options for gaining exposure to it, what is it, of course, and trying to frame it in their language, right, so that they could understand it in a way that would resonate. And
yeah, very cool.
In about 2021, the bank actually put together a working group to understand the broader crypto space, and I was asked to join as a Bitcoin subject matter expert.
That's cool.
So that was a really interesting
awesome
experience as well. Yeah.
So that's very similar to kind of where this podcast is birthed from. We're kind of the Bitcoin guys in our sphere and trying to educate people and, encourage financial responsibility and learning. And doctors are really good at learning. And then we kind of get our big boy jobs and kind of coast on the learning side a little bit. I think a little bit too much, especially when it comes to financial matters. And you just kind of pretend like doctors are bad at finances and will always be bad. We kind of take a growth mindset approach and we can always be learning something. And we think the thing you should be learning is Bitcoin.
I agree.
I'm excited for this conversation, and so I initially reached out to you because I saw one of your posts about FIRE, like financial independence, retire early. Tell us about your path in that. Like, is that from like James Dahl and White Coat Investor, or like what was your trail
Yeah,
into that?
so I have seen a little bit of what he has put out. Really, I don't know if it was in response to something that y'all had done, weeks or months ago or something. It wasn't that long ago that I had found out about him. I hadn't really heard of him before that. And I remember looking back whenever that was and saying, "Oh, well, this was kind of old FUD, same old thing that we would expect from any other like financial independence personal finance type blogger." I just listened to a podcast on I think it was Bigger Pockets Money. They had Mr. Money Mustache on there talking about it. And at the very end, it was asking him about Bitcoin. Does he still think that it's stupid and all of this? And it was all the same stuff, right? Like he hasn't budged, he hasn't changed. That's to be expected, right? When you build a large enough brand, it's very difficult to change your view on something that you took such a stand on. And I actually inaugurated my newsletter, Fire BTC, with an homage to Mr. Money Mustache, and titled the first post "Why Bitcoin is Stupid," and kind of call him out. He wrote that in 2018. I think it was February. The price was about 14,000. It's obviously 114,000 today. It's a little bit of a miss there.
A little bit.
If you listen to this podcast that he just did with bigger pockets, he'll say it doesn't matter what the price is. It's stupid. It's not an investment. It could go to zero, could go to a million. It just doesn't matter because it has nothing. It has nothing to do with like actual money. And I'm just like, okay, I could see how you can think that early on in Bitcoin's history when it's much less widely adopted and there's not that much interesting literature out there for you to easily learn about it from your frame of reference. But come on, like at this point, you got to be kidding me here. This is
Yeah, at
a
this
little bit
point,
ridiculous.
the information is just everywhere. Like you don't have an excuse to not know about it,
Yeah, and
right?
it's one thing to call it Tulip Mania and Beanie Babies when it goes up and crashes 80% the first time, or maybe even the second time. But if it does that and comes back, 3 or 4 times, like you probably just need to check your premises, right? You just need to check your priors coming into this thought process because something's wrong. Like you're not thinking about this correctly.
It's always the naysayers that know the least that are the loudest voices in the room. It feels like we have a certain partner in our group
For
who
sure.
like undoubtedly like when we had the run up from 70 up to like the 118 120s, Chris and I were at a new hospital. We were getting credentials, so there was a group of us together, and like the first thing he did is walk up to us and be like, "Why is it going up?" And it's like, well, have you not been listening to us for like the last year and a half, and we've given you all of these examples about where we expect it to go?
It's literally
Yeah,
engineered to go up
and
in
he's the
value.
same one that's telling all the other.
That's a stretch, but it's basically, that's basically the essence of it, right? It is engineered to gain value over time, just like the dollar is engineered to lose value over time, which is why you can't save in it directly, right? Which is why you have to go out the risk curve and find other assets to store the proceeds from your hard-earned job to be able to access that at some point in the future, right? Like money is, I'm writing about this week, right? Money is one of its primary functions is to reduce uncertainty and to give you optionality into the future. And dollars, I guess you could say they give you certainty, but it's certainty that you're going to lose value over time. And so it doesn't make any sense to save in it because you know that you're not going to be able to purchase as much as you can in the future. And everybody basically knows this intuitively, right? Like the FIRE community, I know I haven't given my background in that, like you asked. I'll come back around
No,
to
you're
that.
fine.
The
This
FIRE
is totally
community
free form. Whatever you want
intuitively
to talk about.
understands this, which is why they advocate for what they do as a reaction to it, which is you are very intentional about the money that you spend, save as much as you possibly can, as fast as you can, and you, what they would call invest that money in the stock market. Some of them advocate for real estate along with the stock market, but the primary vehicle is buy the broad stock market index. Like just get exposure to the entire stock market. And we call that investing. You want to save your money and then invest it. And then it will compound over time and you'll be able to retire much earlier than most people do because they're not thinking about it in that intentional way. And it works. It's great, but it doesn't work because you're investing. It works because you're using the stock market as a savings vehicle. And in fact, it has become the primary savings vehicle for the majority of retail people, I would say, across the United States at least, and really across the world, because it is largely accessible, it's very liquid, and it does always go up. And it primarily always goes up because the value of the dollar always goes down. And then there is some extra juice that it gets from the fact that the US has historically had the strongest economy over the last 100 years, that capital is flowing in and continuing to put us on a relatively better footing than the rest of the world. If you are following this strategy and you were in Japan for the last 40 years, you don't exactly have the same amount of growth in the stock market until maybe recently, right? And so the US does sit at a privileged position relative to the FIRE strategy of saving as much as you can and plowing it into the stock market. What I advocate for is that Bitcoin is a better savings vehicle. It should be a part of that mix as somebody who is pursuing financial independence. And when you do the work of actually understanding it, you tend to develop a little bit more conviction in it. And that allocation that you've decided for yourself tends to go much higher. And that's what happened to me back in 2019 is when I really started to understand Bitcoin and what it was, how it worked, and why it was so powerful. And there was a certain point in my mind where I just made the decision, well, why am I saving in stocks? I'm just going to save all in Bitcoin. And so I like kind of just clean break started buying only Bitcoin with all my excess cash flows from,
Right.
over and above what I was saving versus what I was earning, and building that savings nest egg in Bitcoin as my primary savings vehicle. And lo and behold, that actually has worked out very well. In a very, very, let's just say, very good financial position much earlier
Yeah.
than I was
And
expecting to.
now you help people do that with Unchained, which those tools didn't always exist. So I'm sure back then, you said 2018. I don't know when Unchained was started, but I know that all the ecosystem of investing into Bitcoin, especially with retirement type money, has definitely evolved over the last few years.
Yeah, Unchained was founded in early 2017 is really when the
Okay.
business kicked off. So, what Unchained is built for is helping people to secure fairly material or substantial amounts of Bitcoin in the best way possible. And doing that directly in the asset by controlling the private keys to that Bitcoin directly, as opposed to trusting somebody else, as opposed to having a single point of failure with a single private key. We approach this in a collaborative custody manner where there is no single point of failure, where you've got a team around you that can help you. And there's a succession plan that we really help our clients to implement so that their Bitcoin can pass down in the direction that their estate plan has laid out, right? That's handling the title transfer, but you also like Bitcoin is a bearer asset. And so you need to be able to have a plan in place for succession if something were to happen to you. And so that's very important to our clients. Almost everybody that I talk to, right? They're trying to solve two main problems. How do I not lose my Bitcoin? How do I pass it down to my family? And so we tend to focus a lot on building products for that purpose, building services around that collaborative custody model that will put them in the best possible position to solve those two problems for themselves.
Yeah, it's awesome. It's been cool to watch kind of as you guys release new products and as the marketing gets out there. And like I see a clip or a video that you do or some of your colleagues do. I'm like, oh, I didn't even realize that that was a thing. I need to look into that. I imagine you get some physicians that come your direction trying to meet those exact goals. Do you think that number's picked up? Is it stagnant? Do we need to make more podcasts? Can we retire from this podcast? Like, what's your take on it?
It's funny, actually. So we have a couple of different tiers of service. And in our full service model, which is called Unchained Signature, it's dedicated account management. You've got like tons of hand holding. It's all inclusive. Right? It's meant to be all encompassing and give you a really high touch experience. There is a very large subset of doctors that are part of that service. It's kind of funny. We almost joke amongst each other. Another job doctor joined in the signature service. I think that's because, and you guys correct me, right, if I'm saying something that doesn't jive with your experience, but doctors tend to value expertise that other people have and are willing to pay for it. I think they, in a lot of ways, recognize the expertise that they have in their specific field and how hard won it is, and then in turn kind of recognize the limit of their understanding of certain things and just want to make sure that they do things right, and are more than happy to bring experts into their circle to help take that off of their plate and make sure that they've got things set up in the right way. At least that's what I've found in my experience in talking to a lot of these MDs who are using Unchained more generally speaking, but then also who are very focused on that signature offering.
Yeah, I'd say there's a dichotomy. Like there's the split group that does value other people's expertise, like they have the humility to realize that they're not experts at everything. And then there's the other half that thinks that they're good at literally everything and try to do it themselves and end up like trying to trade and
The
day trade and
neurosurgeons,
do.
probably, right?
Yeah. A lot of, I would say surgeons are more in that group, generally speaking,
Yeah,
but it's a
right.
mix. But like the ego buildup of being a doctor and like getting all this high level education, and especially if you're a surgeon, just because we work in the operating room, like certain places and certain specialties get treated kind of like royalty, you know, they can do no
It builds
wrong.
up
And
that
so they,
ego.
I think that gets to your head after a while. Yeah, it builds up that ego. And then you're like, oh, I can manage this. I can, or whatever. I don't know. It's a dichotomy, but I do think that there's a healthy chunk of doctors that are exactly what you described. And our goal here is to try to make more of those doctors.
Yeah, absolutely. A worthy goal for sure.
Yeah.
I think a lot of the, I think doctors, so my dad is a retired radiologist, and he spent a lot of time investing and managing a stock portfolio as well, like kind of on the side.
Mhm.
And, from my perspective, watching all of that, I saw him in the prime working years, like really working his butt off and long hours. It's very stressful. There's obviously a lot at stake. You're dealing with other people's lives, right? And I think that, like, while people really love the work that they do as physicians, it seems to me that a lot of times that can grind on you after a while, right? Like it takes, seemingly 20 years just to go from high school to actually starting to practice. And then from there, it's, another 10 years or something before you're making like really actually good money and perfecting your craft and doing all of that. And it just seems like such a long time horizon before you kind of get to realize the dream of being able to help people in medicine. And by the time you get there, it seems to me that, that is a hard road going forward. And I think a lot of doctors look at that time and they think, well, I need to make sure that if I can't practice anymore, that I have a good grasp of finances and investing. And by the way, like typically speaking, I've got some extra cash laying around that you need to figure out something to do with. And so you tend to take a little bit more of a interest in investing and in growing that money. One, to kind of think about that escape from medicine that after you've worked so hard to do it, but then also to make sure that you are doing well by the dollars that you're earning, or the wealth that you have been building over time. Is that the
Yeah.
same like experience that you've had, or am I thinking about this the wrong way?
No, I think that's completely right. And we did an episode kind of talking about the long journey to being a doctor. And it's a lot of years. But yeah, I think you're spot on. Like doctors have this huge delayed gratification of education and money and debt. And then they get, like I said, they get the big boy job. They think that it's going to solve all their problems because it's the ultimate summit. Like you reach the summit, you have this job, you're done with training. I think financially, it's not as rewarding as people think initially, and they struggle with that. And then there's a delayed gratification, and they just like choose to make really big purchases early on and put themselves back in debt. There's some of that, but I think just from human psychology standpoint, we're always chasing the future instead of like trying to live in the present. And then you get to that future you think you wanted and realize it's not as good as you wanted, or not even really what you wanted in the first place. I think that just human nature aspect is just compounded for doctors. But it lines up with exactly what you said. We as physicians put in so much time and effort. you get there and then you realize, and then your needs change too, right? Like when you start, you're like young, single, coming out of college. By the time you graduate, a lot of people are in serious relationships, married, have kids. You realize the life you thought you could afford to live is a lot more expensive. And plus the debasement factor, right? Like when you started and when you finish, that dollar you had day one is not worth a lot in spending power by the time you graduate. So I think it all compounds together. We just kind of get the worst of all the worlds, and then on top of it, in the American system, our pay isn't. We are not all working for Medicaid and Medicare services like the government, but they set the rates that end up influencing. They're kind of like the Fed. They set the rates, and then everyone else goes a premium or discount to their rates.
Mm-hmm.
And those rates have not kept up with inflation and have just been losing to inflation, like even nominal inflation, not even real inflation. So it's all of the above, and kind of what we get into in different episodes here. But
is that right? We see all the time that healthcare costs, medical costs are trending well north of inflation, but you're saying something that's a little evidence to the contrary there.
The pay to physicians doesn't keep up with that. The cost is definitely
the pay
rising.
to physicians has actually gotten
It just goes to the administration of the hospitals.
Yeah, a lot of it.
The drugs are more expensive. The admin's more expensive. The facilities are more expensive. Like to build a hospital, everything costs more. If you think about it just from debasement perspective. But we have very sticky to almost like sinking wages in real terms. Just on a big data.
Chris's dad is a
set.
family medicine doc, and he was on one of the earlier podcasts, and he was saying his highest real wage ever was like 1998 or something like that. He
I think that might actually have been the nominal wage, like just the actual dollars on his paycheck has never been higher than like when he first started in the 90s. Yeah. I don't know what he adjusted that by like hours or something, but yeah, it's that's a striking fact. I think we talked about that in episode 1 or 2 for our viewers that are not familiar with what we talked about before. But doctors are in a rough spot, and combined with the ego and everything else, like we're very prone to make really poor decisions, especially early out. So that's why we keep coming back every week to try to educate. And we think Bitcoin is the ultimate way to store your wealth long term. And eventually, I want to talk about this next with you, Trey. But we had initially, I said on one of our podcasts, me and Adam had shared one of your writings from Substack. It was the one about let me see what the title
making your
was.
Portfolio
making your job your side gig.
Yeah, making your job your side gig, and transitioning to wealth-driven portfolio versus a wage-driven. What am I trying to say? A portfolio-driven wealth versus just from your salary. I totally butchered that transition. Tell us more about what caused you to write that, Trey. What your feedback has been on it. Is that one of your main focus? Is that your total main focus? Like, just talk about that. We'd love to hear about it.
Yeah. So what I mean by making your job your side gig is it really dovetails with the approach that the FIRE community is pursuing, which is that you aim to build a portfolio of assets, a savings portfolio, as I like to call it, as opposed to an investment portfolio. I like to make that distinction based on what we were talking about before. A savings portfolio that is large enough that you can draw down on it over a series of 30 plus years to the effect of funding your lifestyle. And there was a study back in the 90s called the Trinity study that coined the 4% rule, and just cutting through all the noise there, all the detail. Basically what this says is that you can live off of 4% of your portfolio every year for a 30-year plus period and be able to fund retirement as long as you get to a number that is large enough. And that number is the inverse of that 4%, which is 25 times your annual expenses. So if your annual expenses are $100,000 a year, you need $2.5 million in your savings portfolio. And based off of the historical studies that they had run, you can live off of that $2.5 million portfolio over a 30-year period or more. Actually, in most of the testing that they did, or most of the data set, you would end up with far more than that $2.5 million, even after 30 years of spending $100,000 a year on it. And so, if you are spending $200,000 a year, you need $5 million, and on, right? Just take that annual expense, multiply it by 25x.
And that's assuming a 60-40 traditional stock bond portfolio, right?
Actually, the
Was that how they
Trinity
ran the
study
study?
was 50-50 stocks and
Okay.
bonds. I think most of the fire proponents and the way that I had initially approached this was 100% stocks, especially when you're younger. You can be much more aggressive. Personally speaking, I wouldn't touch a bond with a 10-foot pole. They are, basically all risk and very little rewards, like picking up pennies in front of a steamroller, like classic example there in my mind. And we saw that actually in 2023 when bond prices just fell off a cliff when the Fed raised rates and when there was a banking crisis there. So what does this have to do with making your job your side gig? That portfolio that you're building, you can think of that as the balance sheet side of this equation. And when you first start working, basically all you have is your income statement, right? You've got P&L, so to speak. Think
Right.
of this in business terms, right?
You have a basic budget. You have money coming in, you have money going out.
You have money coming in, you got money going out, but there's no retained earnings, right? There's
Right.
nothing on your balance sheet. You don't own anything yet, really, right?
Mm-hmm.
But over time, if you're doing this the proper way, you are saving some portion of that incoming earnings and putting that into this savings portfolio and starting to build it. Well, when you get to this 25 times your annual expenses, at that point you've reached financial independence. And so, but even before you get there, you'll get to a place where you're actually making more from the compounding growth of your savings portfolio on average in the average
Mm-hmm.
year than what you are earning from your income from your job. And when that happens, when that flip happens, right, whether it's before you reach financial independence or after, the question that I'm posing as part of this is, does that make your job your side gig? Because if you think about like your main job, typically it's the thing that's earning you the most money. Well, if your balance sheet is actually earning you more money than the income that you're producing from the work that you're doing every day, then your job is kind of your side gig, right? And ultimately that is the goal. That's what you're working for when you are pursuing financial independence. You are trying to build this balance sheet up so that it can replace the income that you have coming in, and then you can shed that job or go work on whatever passion projects you want to work on, or keep the job and just have a whole lot less stress about what's going on in the future because you've got this big nest egg that you can live off of. And so that was the concept that I was trying to get across in that particular piece. And actually, I know you guys have talked a little bit about a strategy and the Bitcoin treasury companies and that kind of thing. There's a similar type of concept here that I focused on in another one of my pieces called the stacking sprint. And the idea behind this is when you are actually early in your journey and you're starting to save and build that savings portfolio, you have a much greater impact on the size of that portfolio early on. The yield that you're getting, the amount that it's growing on a percentage basis goes much more quickly in the beginning to the point that those first years are actually much more important than the later years of saving. Why is that? Let's say that you've got, $1 million saved and you want to add 10% of that. Well, you've got to save $100,000 in order to add 10% to your nest egg there. If you are only starting at $10,000, well, you only have to add $1,000. You can do that in a week, right? And so those early nest egg years actually are much greater impact on the compounding nature of this equation than the later years. And so in the stacking sprint, the way that I think about this is if you spend the first 4 or 5 years stacking as hard as you can, building a nest egg of Bitcoin as fast as you possibly can, stacking sats as fast as you possibly can, you actually could start to let off the gas in the later years and enjoy more of your income and save a little bit less, because the momentum that's coming from that compounding vehicle savings portfolio that you've already built is going to have a much greater impact than any additional contributions that you're making to it. And to put this back into Bitcoin treasury company terms, your BTC yield only goes down over time.
Right.
10 years down the line, Your yield to add $1,000 versus $100,000, well, that's a 10% yield. Well, what if you're at $10 million? A lot of doctors, they get to that net worth. Well, now you've got to add $1 million in net worth. That's very difficult for most people to do just from your income, but it's actually a very normal type of compounding that is happening from the savings portfolio that you've already built. So your yield coming from your investments, your new contributions goes way down, but that nest egg balance sheet side of things can continue to compound at an ever growing rate there. So those are some of the different concepts that I like to talk about in these these posts on my newsletter.
Yeah, that's awesome. I subscribe to your newsletter, I think, before we even set up this thing, and enjoy, reading all these topics, because it's the same language we talk on our podcasts, every
Yeah,
week.
great.
Yeah,
Thank you.
you're speaking our language.
It really is. It's a simple, like, very long-standing principle here, right? That
Yeah.
over a long period of time, it's slow at first, that compounding, and the growth of your balance sheet is happening more from your income. But over time, that compounding adds up to something that's so much bigger than anything you could add from the income side of things, that it's almost negligible what you're able to add, right? At that point, if it's negligible, then you might as well spend a little bit more and enjoy your life a little bit earlier. And that's kind of at the core of what the retire early part of FIRE is meant to portray, is that, look, a lot of people go through life with this like set framework in mind. They go to college, they get a job, they work for 40 years, they retire at 65, and they go play golf, right? Well, that 40 years is actually the best part of your life, right? Like, at that point in time, you've started to make money, you still have energy, you've got your kids while they're young, you have a home that you own. It really is like the sweet spot in life. And it's a shame to have to put off all of the good parts about what you want to do and your passion projects and the travel that you want to do until you get so old that it's harder to do them. And so there's this theme or thread through the FIRE community, which is, why should we put all of that off? Why don't we put in a whole lot of extra intention and work ahead of time, know that this is a possibility that we can do, and then pivot much earlier in life into things that we are actually passionate about, and do the travel and enjoy the world, in a much more fulsome way, as opposed to just having these three different stages, right? You're young and somebody else is taking care of you, and then your working years, and it's all work, and maybe you get your 2 weeks vacation, and then you retire and you just play golf.
I think that whole concept is even more true as a Bitcoiner, and I think why all of us are here making podcasts and trying to educate people is, you realize that traditional S curve of adoption, like, we're gradually for a long time, and then we're very suddenly very quick, and it's always a question of where are we at on that curve.
Yeah.
But when you're trying to help people get onboarded, like, when you kind of get deep in the rabbit hole, deep in the matrix, or out of the matrix, you realize, like, at some point it's gonna be too late, or it's not gonna be too late. But
You're not gonna get as
there's never a better time
supercharged
to
of returns. The earlier you get in, the more beneficial it is to you.
because there's your personal compounding timeline, and there's Bitcoin's overall macro timeline, and we're trying to balance. You're trying to balance both of them.
Yeah, and I think these principles still apply 15 years, 20 years from now, when Bitcoin is like, on the upper edge of that S curve and starting to flatten out. I think those all still apply, right? You're still going to get, like, as a young, my grandkids, let's say, whenever that happens, they still have the ability to retire early by taking these principles, by being intentional on their spending, by saving as much as possible, especially early on in life, and compounding that using a tool like Bitcoin that is going to grow in purchasing power over time, right? And I think a lot of people just don't even recognize that this is a possibility. And that is something that I have found very useful from the FIRE approach, is just the recognition that this actually is something that people do and that people can do. You can do it. It's actually very easy. Just think about what you're spending, make sure that you're saving as much as possible early on, and then you just buy Bitcoin, or you buy stocks even, right? And 10 years later, you look back at that time, and all of a sudden you're like very wealthy. You're in really good shape, and you can start to have a lot more options, as opposed to, what my experience was, is just kind of being stuck in a corporate job and not really
Hmm.
having a plan for how to get to the next stage. It's a very passive way to go about life and your working career, right? It's just, okay, I guess this is what I'm going to do, and then, at some point in the future, I'll figure out if it's time to retire. I like to be a little bit more actively engaged in that thought process, and I think that's what resonated with me with the fire community.
For sure. I think that speaks to the personal responsibility piece is what I think it's great with fire. Even like the people that don't get the Bitcoin part, I think they're still better off than people that are just lost out there in the wilderness.
Absolutely.
And you learn the financial responsibility and really just budgeting and like or just the basics of budgeting, that is spending less than you make, which is
Yeah.
what it all boils down to, right?
And
And then the
yeah,
question is
it's
what do you
that
do with the
intention.
excess?
It's that intentionality about it, right? It's making sure that the money that you're spending are on things that actually adds value to your life, right? It's very easy to just buy whatever's in front of you just because you kind of feel like it in the moment.
Hmm.
But if you're taking inventory of what you're spending, if you're making sure that you're not just throwing money away and instead taking that extra value and saving it, you're not like stripping any of the joy away from your
I
your
think it'll still
life,
be
but
recording
you
on
are
his end.
absolutely able to bring that
Oh, this didn't happen last time
optionality
I did
closer to
this.
the present and be able to enjoy
Let me
the
see.
things that you want to be doing in life much earlier. That is the goal
People
here. Just having and in like
having a
taking
plan,
an
yeah.
intentional look at the money that you're spending to make sure that you're not wasting it frivolously and that you are actually spending it on the things that add value to your life. And then kind of ruthlessly extracting all of the froth and waste that you kind of naturally over time with entropy have built up in your finances. If you extract
Hmm.
all of that out and then just save that excess value, especially if you're saving it in Bitcoin, you're gonna shave years off of that time where you can actually get to a place to enjoy the passion projects that you would like to pursue and not have like the sword of Damocles over your head for the job that you have, whether you like it or not. Like, you don't want to be in a position where if you lost it, you're in dire straits, right? And so having this like large liquid net worth in the form of Bitcoin, especially, but even if it's in a large portion of stocks, it gives you so much power over the course of your life, the course of your career, and the optionality to do the things that you want to do when you want to do them.
Yeah.
And so that is what life is about, right? It's about being able to make decisions that having the freedom to make decisions based off of your timeline and your preferences and priorities and that of your family, and being able to spend time with the people that you want to spend time with, as opposed to being kind of forced down a path whether you like it or not, right? that
Yeah.
that's the ultimate thing that we want to pursue and reach, is that optionality, the ability to really control the time that you've got here with your friends and family.
Yeah. 100%. I don't know if I can say it
Yeah.
any better than that. It's like a natural closing point. Well, let's get to our closing topics. We usually like to talk about your views on Bitcoin. Like, is the halving cycle dead? Are we in a super cycle? Like, everyone's opinions change all the time. Like, if you look at X or whatever, what is your current view on where we're at, where we're going?
I am not convinced that the cycle is dead. I think I'm in the camp of stair step elongated cycle, so that
Hmm.
this thing extends into next year, maybe substantially into next year. I think, the Fed is about to start lowering rates. The mid-cycle elections are coming up next year, which means there's a strong incentive for the current administration to kind of juice the economy and make sure things are running hot. We just haven't seen that enthusiasm and massive price upswells like we have in previous cycles that would lead to the amount of leverage buildup that is needed for a
Hmm.
very large downdraft and extended bear market. And so I
100%
think
agree.
it's
Yeah.
very unlikely that from this point right now, we would have a deep and extended bear market. That doesn't mean that we can't correct 40, 50% or something like that, but I think that would be fairly short lived and would be bought pretty aggressively by all the institutions that are out there and really put a floor under that kind of thing, assuming that that doesn't happen or that there isn't some kind of big upswell to precede the next downturn. If we get like $200,000 Bitcoin in fairly short order, like before the end of this year or into early next year, if something like that happens where we have like 6 months and it just kind of goes straight up, that is the environment that can lead to a large protracted downturn. And so it remains to be seen whether or not the cycle's dead. I'm not a believer in that yet. I just think there will be a cycle. It's just going to be a little bit more elongated. But I do think that at a certain point, we reach an inflection point where there's too much FOMO. People see the price going and retail floods in, institutions flood in, and they're kind of price indiscriminate. And that is what sends it on that like massive bull run toward the end of this cycle. And then, we'll likely see a big drawdown after that. That's my base case.
100% agree. I think we haven't reached the leverage point where it's going to fall out, the floor falls out, but all the stuff you talked about leading into next year and elections and rate cuts, like the fuel is coming. And I think you tell people you need to be careful and avoid that, but it's going to happen. Like markets are markets and
100%.
psychology is psychology, and people are going to overextend themselves.
Yeah. We're all humans at the end of the day. These types of market gyrations and dynamics they happen throughout history, throughout all markets. Bitcoin is no different in that regard. In fact, it's amplified in Bitcoin, right? Because it's so new and it has perfectly limited supply, which means that the dynamism of a move upward is really like blows people away, right? Like there is no supply reaction that can dampen, like new supply reaction that can dampen those types of moves, only until you get like these huge blow off tops and you get like massive amounts of old Bitcoin coming onto the market to kind of sell into that new liquidity. Do you actually get a stop in that price? I was joking with some people on Spaces not too long ago that it's like, look, everybody gets caught up in the enthusiasm. Whenever the price of Bitcoin like runs up to 500,000, like everybody and their mother will be screaming that Bitcoin is going to go from 500,000 to 1 million. And that's probably the time where, if you were going to quote unquote take profits, I don't really do that kind of thing, but if you were looking for a market top, that's probably where it's going to happen. But the problem is that actually selling at that time is very, very difficult from an emotional standpoint because you're caught up in that enthusiasm too. And because it actually is not beyond the pale that the price, having gone from, let's say, 100,000 to 500,000, why couldn't it just double one more time and get to 1 million? Like it's very likely that it would. And if you sell in 500,000, then you're going to be kicking yourself if it very easily goes to 1 million, right? So like actually being in the moment of all the enthusiasm and euphoria around you is very, very difficult to manage. Which is why I don't try to do any of that. Like the fire way of doing this is you stack sats as much as you possibly can. You build that balance sheet, you build that compounding machine, and then when you are ready to retire or you need to start living off of that, you just sell as you need it and you ignore the price, right? Because it's kind of baked into the math that you've already done the hard work of getting yourself into a position of being able to withstand volatility going forward and the gyrations of the market, and you just need to kind of lean into that and embrace it.
Yeah. Awesome. We've come full circle. How to save, how to retire on it. Any resources you point people to? Like if new Bitcoiners, people curious, like where do you point them?
We'll definitely take a look at my newsletter. It's firebtc.substack.com. I write almost every week. I'm starting to work through the possibility of a book. So that's forthcoming. Cool. I was hoping I'd be a little further along by now on that, but you know how life works. But you can check me out on X at @TS_HODL. And then go check out Unchained, unchained.com. if you are already have a fairly substantial material amount of Bitcoin and you want to make sure that you are holding it in the most secure way possible with a team of experts around you, no single points of failure, and have access to all the other financial services that we have, feel free to reach out. We do complimentary consultations. We have these types of like one-on-one conversations every single day, helping people understand what the best path is for them and getting their questions answered. So it's a really great team, a really great company. Couldn't be prouder to be a part of it. That if you're ever doing other types of things, like happy to support
Yeah,
you
for
guys.
sure.
I really appreciate the content you
No,
guys are doing.
we really appreciate you coming on, and your content's great. I think a lot of doctors, the ones we know, are like really into the fire thing. Like the ones that are responsible are into fire, and then they struggle to make the jump from fire to Bitcoin, and you're like perfectly bridging that gap.
Yeah,
So
perfect. Well, that's
you're on
the
my
idea.
resource list of people to send, of places to send people for sure.
I appreciate that. That is the idea for sure. So
Yeah.
thank you.
Adam, any final thoughts?
Yeah, Trey, I guess the last question I wanted to get across, the purpose of our whole idea of starting this podcast for the docs is, it's hard to get people orange pilled, right? I'm sure you've seen it's hard to get people to embrace fire. And then, it's that whole idea of like 1% of the people understand Bitcoin, and within that 1% understand strategy. And with the Bitcoin treasury company, it's kind of the same idea, right? Like you get 1% of the docs to understand fire, and then 1% of those people understand Bitcoin. Having been in that banking background, do you have any tips for how you like to get the bankers orange pilled, or now being in a chain, how you get some of those docs to understand when you have that first consultation with them?
I stopped trying to actively orange pill people or, help them understand Bitcoin. I think like obviously letting people know that you are a resource for them, as and when the topic comes up. But I'm very passive, I think, when it comes to that. And even when people are asking me questions about it, like I try to answer in a respectful way, but like honestly, like kind of the old Satoshi quote, right? Like if you don't get it, I don't have time to explain it to you. I kind of am in that stage of my journey with Bitcoin. If I see like repeated efforts to try to understand things, like I'm all happy to help people there. But like I have found that people come to Bitcoin when they're ready, when there's so many other touch points that need to happen. The price going up is probably the biggest gravitational pull for the vast majority of people. And so it's helpful for your own sanity to just like let that number go up, technology do its thing, and then be there as a resource for people to answer their questions. So that's how I approach it. I'm very very passive when it comes to to my orange pilling. I let the price do the hard work.
We're gonna make a tally because that's my view, and Adam is very much more evangelical about his Bitcoin views, which is great. We need everybody. But that one
Totally agree.
definitely
Go for
lands.
it, man.
Yeah, it lands in the
Yeah.
Chris camp. Adam, I'm sorry.
It's okay. No, I was just curious. I just see a lot of these guys, like the ungodly amount of call that they're taking at at older ages, and like not being home with their kids and just missing out on stuff and holidays because they're working so much. And it just makes you realize, like, you've been an anesthesiologist for 25 years. Why are you still working like this random Saturday holiday call and like killing yourself? And just trying to prompt those discussions, because I know Chris and I don't want that in our future. So
you guys probably know better than I, but I imagine that happens because you kind of just get into this flow of things and the momentum gets away from you, right?
100%.
And it's so hard to step back and just take a look at the situation and then carve out a path to actually change that and mold the environment around you so that you're not in that position. And that really is what the fire approach is all about, and it's why I was drawn to it, right? So I don't know, hopefully for people who are interested in that, right, feel free to share the newsletter. Hopefully they get something out of that. And
Yeah, absolutely.
For sure.
We'll wrap it
here.
Is what it is.
Yeah. Trey, thank you so much for donating some of your time to our cause. We're happy to support yours, and we'll be sending as many people as we can. For Chris, Adam, and our guest Trey, thank you for joining the Bitcoin Fellowship. This will be episode 9, I believe. Thank you guys for joining.
Very good.
Share with your friends.
Thanks, Chris.
And we'll continue the conversation next week.
Thanks, Chris. Thanks, Adam. Appreciate it, guys.
Yeah, appreciate it, Trey.
Yeah.